Hello and welcome to the show. You're watching Big Deal and I'm Nisha Poddar. Now remember, cement deals are the ones which are really making headlines. Some serious amount of money is getting transacted and the stakes are really high. So on the show today, the biggies of the cement industry will be joining us. PUNEET, DALMIA, ANIL, SINGHVI as well as VIKRAM, HOSANGADY are there joining us on the show to make sense of the deals in the offing and also crystal gaze on what's expected next when it comes to cement deals. But first to the large deal between JP Associates and UltraTech which was signed this week. Here's the anatomy of the big deal.
It's a golden handshake worth over 16,000 crore rupees. But what went on behind the scenes was full of drama, no less than a Bollywood masala film. Protagonists Kumar Mangalam Birla, Manoj Gaur, and to add to the complicated deal triangle is the largest lender to JP Associates, Chanda Kochar. The story reached a crescendo when the buzz of Sajjan Jindal entering the fray with a better offer gained momentum. JSW, the other company, taking advantage of the issues in JP-UltraTech marriage. Government also got an equally important role to play in JP-UltraTech saga, with the changes to MMDR Act coincidentally making a timely entry, forcing Birla to take a second look at the deal agreements, and this thickened the plot further. Lenders up in arms with their biggest weapon, SDR proposal for JP Associates took the deal to the battlefield. In the climax, like all Bollywood films, it's a happy ending with deal size reworked and UltraTech to pay 289 crore rupees extra as transfer fees required under the MMDR Act. Matter now in the lender's court for the final verdict.
So that was the story of the largest cement deal in the country. One takeaway that the MMDR Act changes are still unclear to most deal makers I've spoken to. Who is going to define the estimated value of resources? How do you calculate that is going to be a big question. And next on our radar also is another large transaction, the Lafarge transaction, where it may get 9,000 odd crore rupees for 11 million tons of cement assets. Now, Deal Street, remember, for cement has been quite active. We have seen Reliance Infrastructure selling assets to Birla Corp. Also remember, UltraTech had earlier also picked up assets from JP Associates. This is not the first time. And DALMIA BHARAT has also been quite active on the Deal Street. And what is also making the Deal Street very attractive and interesting is the new entrants with deep pockets coming in. Piramal, Sajjan Jindal's JSW, Nirma all have really intensified the competition here. So let's try and crystal gaze and what's in store and whether consolidation will really continue on the Deal Street from the cement space. We have a panel and the gentlemen in the thick of the action. ANIL, SINGHVI, PUNEET, DALMIA and VIKRAM, HOSANGADY. Gentlemen, thanks so much for joining us on the show. Starting with DALMIA BHARAT, which according to bankers is the only show in town. So, Mr. DALMIA, what is it that's really driving the aggression to acquire at a time when globally per capita cement consumption is declining in the developed markets? So, for the Indian cement makers, is it a race to command influence and dominance as far as pricing is concerned, and also the fact that we have to grow to sustain in this industry?
So, as far as the global players are concerned, very few of them have the management resources or the capital to focus serious resources towards India. But if you look at Indian companies, I think UltraTech has been an acquirer. We have been an acquirer. And currently, I think the whole demand-supply situation is loaded in favor of buyers. There are more sellers and less buyers. And after the JP deal, I think UltraTech also has done a fairly serious commitment to the sector. And I think they would probably pause for some time unless they find something which is extremely strategic. As I said, as far as we are concerned, we have also made some significant capital commitments over the last few years. And we are currently focused on integrating our acquisitions and sweating the existing assets. So unless something is very strategic, I don't think people are going to spend too much money at this point in time. And secondly, the market expectations as the economy is reviving, as the demand-supply situation of cement turns favorable, the asset valuations are running ahead of what the cash flows are.
All right, Mr. Dalmia, so of course the valuations are rich is what you are saying as an acquirer, but if you are saying that there are more sellers than buyers, then probably that supply-demand scenario will take care of the valuations dynamics. But Puneet Dalmia is voicing what all cement buyers have been saying at this point in terms of valuations. Are they too high, Mr. Singhvi? And you have headed a large cement company. What is it that you assess the valuations on?
Nisha, valuation is a matter of two factors. One is that you're buying a cement asset versus you're buying a cement business. In case of Lafarge, what is under offer is a cement business. So there is a difference. There is a huge value for cement business versus cement asset. Second is the location. If you are located in an overflowing market like Andhra Pradesh, even somebody is paying $100 will look very, very high pricing. But in eastern market, a $125, $130 because it's a consolidated market. You have a 10 million ton play offered by Lafarge. You have a business offered by Lafarge. Obviously, it will be $125, $130. In case of UltraTech, it's a mixed basket. You have some assets in the north, some assets in central region, and some assets in Andhra. So when you look at the average of the three, I think $120 odd is a good pricing. So I think the pricing is the mechanics of both, as I mentioned earlier, asset play and which geographical location you are. But my sense is that between 105, 110 is what the replacement cost is. What value you are going to pay, a premium you are going to pay on top of it will depend upon what kind of asset, what kind of business you are buying. So metrics will be between 120 and 150. So to compare UltraTech with Lafarge, we'll be comparing to some extent apples with oranges.
Of course, these two deals are not totally comparable, as you said, but what about brand value and the captive mining reserves? How much of valuation of these two factors really come into play?
Well, limestone definitely yes, because it's a critical raw material. Limestone acquisition, which was earlier by way of more of an allocations by the state government, will go through the auctioning process. But your proposition on the brand, and I have a situation here like in case of JP. It is being bought by UltraTech, so JP brand will be killed because UltraTech is not going to use the JP brand, nor JP will allow UltraTech to use that brand, including Lafarge. So Lafarge is also not selling the brand along with it. So whosoever is a new buyer will have to really work around on the brand. So there is a brand premium in these two. But tomorrow if there is any company which has like Ambuja or ACC, whenever these companies got sold, or today any other company which has a huge brand, and that brand can be used by the buyer for all the time to come, like Ambuja is being used or ACC is being used by Holcim, there will definitely be a premium for the brand. But these two assets definitely does not have any brand value because these brands are not transiting to the buyer.
Of course, but the assets are good as well. So let's take a view from KPMG. Mr. Hosangadi, how do you really analyze and compare the recent deals in terms of the valuations? On a dollar per ton basis, remember the current JP-UltraTech deal is seen at around $117 per ton, and the last one was also around those similar levels.
So if you look at valuation and the key drivers for it, one is clearly the size of the asset. Now, if you look at an asset which is about 10 million tons, the valuation will be quite different from something that's 3 to 5 million. 3 to 5 million would typically have a scarcity premium. There would be far more number of bidders. About 10 would call for a very different kind of asset class. That's one key factor. The second factor really is geography. Where are the plants located? Right? Very, very important. What is the demand supply in that region? Because that will determine pricing in the future. Right? So if you look at the East today, the East is widely regarded as a very attractive market and profit margins are quite high. But that's because supply hasn't caught up with demand. Now, if some of the brownfield, greenfield plants do come up, then prices in that region could also come off. So again, I think it's critical to see which region the plants are located. And then, of course, the question is, consolidation, right? I mean, if today an international player is not in the market, please remember most of these international players are currently in markets where there is no growth. And they have no choice but to be in emerging markets like India, China, they already have a presence, or in Africa, LATAM. So to that extent, the scarcity premium will also drive up valuations.
All right, Mr. Hosangady. So let's come back to the acquirer then. And Puneet Dalmia, what is it that Dalmia Bharat is eyeing at this point? Is it in terms of geographies or just expansion of capacity? What is it that you require?
I think, we can't share our detailed strategic criteria. But all I can say is that, one of the things which is very important is that we should be able to, have good synergies with the asset that we buy. And, we must be confident that we are getting asset which is in a market which is stable and which could potentially offer good growth over a long term.
All right, Mr. Dalmia, hold your thought there, because we can't forget that Lafarge deal had also seen so much of drama, because Dalmia Bharat had a huge role to play in that one by challenging the Competition Commission for barring the company from participating in the large Lafarge transaction. We'll find out from Puneet Dalmia on what exactly transpired there. Stay tuned to Big Deal.